Good evening, friends. Welcome to my channel, Stock Index Edge. I'm Nalnakshi Swami here, coming up with the structure. I want to tell you something. If you know this 4 phases of the market, then you will, as an intraday trader, you will not succumb to the manipulation. So when manipulation occurs, actually, what happens in the market, whether it is a weekly time frame or a monthly time frame or a daily time frame, these 4 phases will occur on the market. That is, first phase is accumulation. After the accumulation, there will be manipulation. And then third phase will be the expansion. That is low liquidity run without any resistance. And then the fourth phase will be continuation or reversal. So there are 4 phases in the market: accumulation, manipulation, and expansion, and continuation or reversal. Actually, if you know, as an intraday trader, what is in a daily time frame, which phase is going on through, whether it is accumulation or manipulation, then you can go under through profit. Actually, these 4 phases, in an order, they will come. First, accumulation, manipulation, expansion, and continuation or reversal. Okay, I'm going to explain it to you with the help of the chart. And today is the example. Let me remove this. Okay, let it be there. Here, today, market started from here. Market started from here. This was the previous day close. It went up to the level of previous day low, that is 19,767. It made the low of 19,767, and later up to 10 a.m. there was run. This was the continuation of the yesterday's reversal. Continuation. It was a reversal or the expansion. Then there it started accumulating in this area. This was the accumulation phase. Okay. This was the accumulation phase, and later market started falling over here. This was the manipulation. This was the manipulation time. Market manipulated. Nobody would have thought it will come down. So you need to wait for that. And why did it manipulate? There was liquidity crunch over there, and there was a gap. So they filled that gap till that time, till market came down. This was a manipulation. Their intention was to go upside. So it came down, and then it was the expansion phase. From here to here, it was expansion. It closed. Our market usually closes around this area when reversal time or the continuation of the market continues for the next day, because our market ends by 3:30. So in our market, there are accumulation started over here, manipulation, and it is the expansion. So if you would have known this is the manipulation phase, and the intention of the higher players, bank big players, our intention was to take it high up. So you could have gained lot of money. This was an opportunity for in the intraday trader, this type of movement is an opportunity for an intraday option buyer to make money. So if you know these phases, accumulation, manipulation, expansion, and continuation or reversal. Market closed around whether it is a continuation or reversal phase, they have closed around this. Every day, market closes around the fourth phase of the market. So you need to see where the market is. So there is an indicator. If you go to the indicator section, type quarterly cycles. Quarterly cycles, you get this indicator, quarterly cycles by days theory. So if you apply this, I'm already applied this, I will enable that. You people can make out it is clearly, it has been coded with the accumulation phase, quarterly phase, accumulation, manipulation, everything has been divided into time-wise, it has been divided. So here you try to apply these quarterly cycles so that it will become easy for you to identify on which phase market is going through. Okay, I'm going to enable these quarterly cycles. Okay, now if you see this, I'll zoom it out. Sorry. I'll zoom it out. Yesterday, market, this phase is the continuation or reversal phase. That is the previous day. That was on 21st. Gap up, it was a continuation or reversal phase. The market up to 10 a.m., 10:30 a.m., it was in a sideways and it was a range bound, and around 11:30, this is a black box is accumulation phase, blue box is continuation or reversal of the previous day, accumulation, this was the manipulation. Manipulation, red box is the manipulation, and the market tried to, this was the liquidity, low liquidity run, expansion. It could not close to the nearly low of the session. There, instead of going low, they should have gone low. They pushed the market to the higher. This reversal continued today to the higher side, and the accumulation started. Okay, let me remove this. My name. Accumulation started in this phase, this black box. This is the black box. It started and continued. Accumulation continued and the manipulation started at this hour. Even in the accumulation phase itself, market tried to come below the low of the previous day, 19,777. It crossed the low of yesterday's low and it started moving down. So in this way, you will come to know which is the phase actually. This is the manipulation phase. So if you would have seen the structure on the market, this was the gap. In my previous video, I had mentioned that there is a gap. They will try to fill the gap. They fill the gap because it is an area gap. Area gap will always be filled. So if they fill that gap, if you would have known this level, I knew this level because this is a gap. They are going to fill that. I anticipated that. And even this manipulation, they manipulated the market to bring it down and see the run. This is you can see how big players have taken control of the market. And you can see the big candles to the upside. This is an expansion. Expansion Expansion, it is low liquidity run. That means there is no resistance. There is no red candle at all. It has continuously gone upside and finally ended at the distribution phase or the, reversal phase. That blue box, this blue box, it may continue to the upside because the market tomorrow, what it is suggesting is they have created liquidity above this area. There is, and also there is fair value gap around this area. Probably market may try to go up to this level. In a morning session itself, it can go up to 19,854 because they can easily grab the liquidity. Because stop loss hunting, they can easily take. Stop losses have been multiple, 2 times multiple, market has reversed. So the buy stop losses of all the sellers are flowing over here. The money can be easily exchanged with this liquidity stop loss hunting. The market will try to move to the upside, and also there is liquidity void. That is, fair value gap is there, so it can easily go up to 19,854. Later we have to see what the market will go, whether it will go through accumulation and the manipulation to the upside or manipulation to the downside. We need to see. The only tomorrow, the market, I can see market going up to 19,858 and little bit more on the Nifty. The resistance is 19,878. It needs a big muscle power to cross it. Tomorrow also expiry on the Nifty expiry, so we need to see what will happen on tomorrow. So in the morning hours itself, it can run up to 10 a.m. It can run up to 19,859. So this is the reversal continuation, or it can reverse also. There is possibility two of them. But since there is an easy liquidity available there, they can go fair value gap as well as the stop loss liquidity. The market can easily go up to 19,856. This is how one can make out what it is happening on the market. Suppose if you would have known what is going to happen in the market, see, these are the phases: accumulation, manipulation, expansion, and continuation or reversal. These are the 4 phases which is repeated on the daily time frame, as well as on the weekly time frame, as well as on the monthly time frame. So as an intraday trader, if you know the phases in the market within the 7 hours of trading, if you know these are the phases of the market. For example, this is the continuation. This is the reversal continuation phase in the early morning time frame, and this is the accumulation, and the red box is the manipulation box, and this is the expansion. Expansion, it is distribution, nothing but distribution, and it is low liquidity run, and it is a reversal. It means there may be continuation. And for what I'm seeing on the market tomorrow is it can go up to this level, fair value gap, as well as the market as a easily can go up to 19,856 and little more. And there we have to see whether after that, whether it accumulates to go up further or accumulates and manipulation will take place on the downside. We'll see what we have to see on the tomorrow. These are the phases. You go through this, apply this indicator so that you will come to know. So if you know the time frame, if I divide the time frame around 10:30, the reversal or continuation phase will run in our market around up to 12 p.m. to 12 a.m. This accumulation will run, and 1:30 this manipulation box will come, and the last up to 3 p.m. 3 to 3:15, this expansion, low liquidity run will happen. So if you see here, I'll go to the left side of the box. Left side of the box, on the expiry, that is last Thursday expiry, market ended in this phase. No. It started from here, reversal phase. It started from on 16. It was a continuation. So accumulation, and this is the manipulation box. It was an expansion. So reversal took place so aggressively here, and it ended up, reversal came down up to this level and finally ended at the high point of the day. And then next day, that is 17th, reversal came down. Say reversal ended up to 19,730. That is an aggressive selling, and now the market is trying to push to that level, exactly to that level, and it is facing resistance multiple times. Now it is trying to cross this level. Probably tomorrow on expiry, it may cross this level. We have to see. This is the end of the session. Almost around 3 p.m., the market fell last Thursday. Tomorrow, we have to see. It is the reversal phase in the morning session itself. We need to see what will happen on the market. So you might have understood these are the 4 phases which repeats in the market. So these are the 4 phases in an order: accumulation, manipulation, expansion, and continuation or reversal. Now, market ended. Usually our market ends with a reversal phase around 3:30. So this reversal is at the top, and reversal, it may continue to the upside till 10:30. See, I have marked the reversal phase up to 10:30. You will see this is the timing actually after 10:30. So you need to understand the structure of the market. No, only you know the phases, but you need to see that time period what the market is doing. Whether it is consolidating or whether it is. So after 10:30, this accumulation phase will start in the market, and whether this accumulation will be an expansion or manipulation, we have to see. So you have to decide. You have to understand price action and you have to trade accordingly. Hope this information will help you to take wise decision. So you will be prepared earlier by seeing all these things. Thank you very much, friends. Nanakshi Swami signing off.